Good day, everyone. We are the Group 6 and we're going to discuss about short-term financing. I am Trisha Jullianna de Dios and I am your first reporter. Let's start with the objectives. At the end of the chapter, students are expected to be able to identify different sources of short-term financing, explain the advantages and disadvantages of short-term financing, compute costs and benefits of short-term financing of the firm, and apply short-term financing to make a sound decision. Short-term financing, it consists of all current liabilities. Sinasabi na naglalaman daw ang short-term financing ng lahat ng current liabilities. Ngunit, ano nga ba ang current liabilities? Sinasabi dito na it is also called short-term liabilities. Ito yung mga debts ng company na kailangan bayaran within a normal operating cycle. Usually, less than 12 months lang. Merong advantages and disadvantages ang short-term financing. Una na dito sa advantages. Sinasabi, number 1, it is easier to arrange. Mas madali daw itong i-arrange kasi yung financial institution granting ng loan ay mas maikli ang exposure and mas nagfe-face siya ng less risk. Sa long-term financing kasi, the risks are higher because mas mahaba ang period of time and it takes to collect the entire principal. Number 2, it is less expensive. Yung interest rate niya ay mas mababa dahil nga ang financial institution ay nagfe-face ng lower risk in terms sa period ng collection. Pangatlo, it affords the borrower more flexibility. In times ng declining interest rates, the borrower ay pwedeng mag-avail ng loan on a piecemeal basis to take advantage of lower interest. Dumako naman tayo sa disadvantages of short-term financing. Number 1, interest rate fluctuate more often. In times of increasing interest rates, yung interest expense niya by the borrower ay tumataas. Kaya nagfa-fluctuate siya more often. Number 2, refinancing is frequently needed. Yung mga documents niya ay kailangan updated every time. Kasi the maximum term under a short-term financing is only for a year. Kaya mahalaga na ina-update natin ito palagi. Pangatlo, delinquent payment may be detrimental to the credit rating of the borrower that is already experiencing a liquidity problem. There are many ways to obtain short-term financing. At meron tayo ditong siyam. Some of them are trade credit, stretching of payables, accruals, short-term bank loans, bankers' acceptance, commercial finance company loans, commercial papers, receivable financing, and inventory financing. Para mas maintindihan natin ito ay didiscuss sa mga susunod na bahagi ng report.
Trade credit. From the word trade, it means buying and selling goods and services. And from the word credit, it means it is the ability of the customer to obtain goods and services before payment based on the trust that payment will be made in the future. So, here in trade credit, it involves the trust of the seller to its customers that payment will be made in the future. Also, when we say trade credit, it means it is the business-to-business agreement wherein the customer purchases goods to its supplier without cash up front but paying the supplier at a later scheduled date. Based on the transaction recorded through an invoice or the itemized commercial document that records the products or services delivered to the customer, businesses that operate with trade credits can give the buyers 30, 60, or 90 days to pay. Then, that is how trade credit works. Now, given this formula on how to compute for the average account payable of a trade credit, first we have the annual purchase divided by 360, and then we will multiply it into credit period. Why is it 360, by the way? It is 360 because it is the nominal days in a year. That is why. If you are asking, why is it there is only a formula on how to compute for the average account payable? What about the average account receivable formula? Well, the answer is, as a customer, we must pay for the purchased goods and services on credit. That is why we don't have to come up with the average account receivable formula. Because as a customer, we are paying and we're not receiving. Now there is this so-called cost of discount for gun formula, wherein there is the discount divided by 100% minus discount again multiplied by 360 divided by final due date subtracted by discount period. The cost of discount formula is actually useful for us in determining whether we must offer or take advantage of the given discount. For you and for us to understand these formulas that I've mentioned earlier, we prepared a sample problem with solutions to clarify on how to execute these formulas. Okay, it says here that the annual purchase of the Just company is 1,500,000 pesos. Also, the term offered by the supplier was 2/10, which means the supplier offered 2% discount if they are able to make payment within 10 days. And N/30, it refers with the numbers of days in a month. Okay, also it states here that the company did not avail the discount but always pay on time at the end of the credit period. Now, the problem is how much is the account payable of the Just company and what is the cost of discount foregone. Now, to justify the given formulas that we have mentioned earlier, the first thing that we will do is identify the given to get the average accounts payable. We have here the 1,500,000 pesos divided by 360, which is the nominal days in a year, multiplied by the credit period, which is 30 days. And after that, we will get 125,000 as the average accounts payable. Now, let's move on to the cost of discount foregone. We have here 2% divided by 100% minus 2% times or multiply by 360 over 30 minus 10. Then we will get 36.73%, which is the cost of discount foregone. After this, now we will move on to the factors considered in trade credit. The first factor is market condition. The second one is financial stability. The third one is competitiveness. The fourth one is nature of product. And the fifth one, or the last one, is the nature of demand and supply.
Hi, I am Haziel Cruz, and I will discuss the searching of payables and accruals. Ano nga ba ang searching of payables? Paying the obligation later than expected credit term. Ito nga yung pagbabayad ng obligation na mas matagal kaysa sa inaasahang panahon. This form of short-term financing that helps the company reduce the cost of discount. Natutulungan nga nito ang company sa pag-reduce ng discount sa kanilang babayaran kapalit ng mas mapapahabang araw ng pagdidelay ng pagbabayad. Yung gantong short-term financing nga ay nakatulong sa mga company upang mas magamit pa nila yung pera sa iba pang investing, operating at financing activities ng company. Example, for instance, if the seller gave a credit term of 110 net 30, the cost of discount will be. Ito nga kung paano solvein yung cost of discount foregone. 1.0% divided by 100% minus 1.0% times 360 divided by 30 minus 10 equals to 18.18%. Ito nga yung cost of discount for yan. Pag ang credit term ay 110 net 30. However, if the company will not pay on the 30, instead will prolong the payment until 45 days, the cost of discount for yan will be cost of discount for yan 1.0% divided by 100% minus 1.0% times 360 divided by 45% minus 10 equals to 30.39%. Yung example nga na to ay pinapakita na ang pagpapahaba ng pagbabayad sa obligation ay nagdedetermine kung paano magde-decline yung cost of discount for GAN. Nakatulong yung strategy na to sa company sa short term o sa maikling panahon lang. Ngunit pag lagi na itong ginagawa, maaaring mawala yung trust ng supplier mo sa iyo at yung credit rating ng company ay babagsak. Ang susunod ay ang accruals. Ano nga ba ang accruals? Accruals are expenses already incurred but not yet paid off by the company. Some of these expenses are salaries and wages, taxes and interest. Ito nga yung mga gastos na nangyari na, ngunit hindi pa binabayaran ng company, katulad nga ng salary and wages o yung sahod. Halimbawa, sa company, yung mga employee ay nagtatrabaho araw-araw, pero hindi sila sumasahod araw-araw. Dahil dito, nagbe-benefits ang company dahil maaari niya pang gamitin ng pera sa iba pang operating activities hanggat hindi pa dumadating yung araw na kailangan niya ng pasahurin ng kanyang mga empleyado. Accrued interest payment is another source of short-term financing. Yung accrued interest payment, dito papasok yung firm sa isang agreement o kasunduan sa isang financial institution na magbabayad yung firm ng interest o tubo sa anyang hiniram na pera. Yung interest nga na yun ay naiipon araw-araw, ngunit babayaran lang ito sa napagkasunduang araw ng bayaran. Dahil dito, magagamit pa ni firm yung interest na ipambabayad ng financial institution para sa kanyang operating activities. Yung delay nga sa pagbabayad ng interest ay makatutulong para magkaroon ng short-term fund ang company. Example, FLJ Corporation obtained a 60-day short-term loan amounting to 1 million pesos. The interest charge is 12% per annum. The loan was released on March 1, 2012 and will mature on April 13, 2012. The interest shall be paid at the end of term. How much accrued interest did the FLT Corporation have as a form of short-term financing on the following dates? Dito sa mga dates na nandito, ay alamin natin kung ilang accrued interest ang mayroon si FLT Corporation as a form of short-term financing. Gamit nga yung formula na I equals to PRT, makukuha natin yung mga sagot sa mga sumusunod na petsa. Sa March 15, 2012, ang accrued interest ni FLT Corporation ay 5,000 pesos. Sa March 30, 2012 o sa ika-30 na araw, ang accrued interest ni FLT Corporation ay 10,000 pesos. Sa April 15, 2012 o sa ika-45 na araw, ay mayroong accrued interest si FLT Corporation na 15,000 na maaari niyang gamitin as a short-term fund ng company.
Short-term bank loans. These are loans secured from banks which are payable in 1 year. Banks obtain their money from current, savings, and time deposits, and other special forms of accounts. They lend this money in individuals, companies, or government agencies as a sign of indebtedness. Banks ask companies to sign a promissory note. This document serves as proof that the company has an obligation to pay back the bank for the principal and interest when the terms mature. The loans obtained from the bank are paid off on the maturity dates or by installment. Interest, on the other hand, is collected either in advance or at the end of the term. These are several reasons why a company borrows money on short term. First, to cover the prices of the goods purchased. Second, to take advantage of the cash discount offered by the seller. Third, to cover for the operating activities of the company. Fourth, to cover for the down payment in the acquisition of fixed assets. Fifth, to reserve cash for the unexpected activities of the company. Sixth, to make cash dividends payments. Before the bank grants loan to the firm, it assesses the company for sufficient equity and liquidity. Firms seeking a loan are assessed based on the 5 C's. 5 C's are character, capital, capacity, conditions, and collateral. Banks in general require that client firms have good relationship with them before these firms are given higher level of service such as loans. Thus, firms have to maintain first a good track record with the banking institution. Otherwise, they have to look for referrals acceptable to the bank. Before a loan is processed, investigations have to be taken. Banks have their own credit investigation to ascertain the existence of the applicant and the veracity of information indicated in the loan application. The report finding by the investigators will form part of the loan application. Financial statements, normally of 3 consecutive years, are submitted by the borrowing company to determine its capability of paying its obligations. Collateral such as real estate located in prime areas, shuttle mortgage, blue chip stocks, and other documents are also asked as part of loan security. Before the loan approval, the account officer will lay out all the conditions given by the bank before the release of such a loan. Some of them are as follows. First, companies are asked to deposit a compensating balance, that is, they are required by lending banks to maintain a minimum balance to low-cost account like current or savings account. Second, the rate given is based on the prime rate, the London Interbank Offered Rate or LIBOR, an additional rate above the prime or LIBOR, or a rate which the bank thinks are reasonable. The loan may be given as lump sum or on a piecemeal basis depending on the approving officer. The reason for it is that the approving officer may still be wary of the company's performance and would like to protect the bank's best interests. Fourth, collaterals to be offered by the company, if any. Fifth, the amount of the loan to be given.
Compensating balance on account holder's account. This concerns the balance maintained in the account of the depositor, called Bandemong 1988. An example is the auto debit card transfer account. It is an account where payments are made through checks but the funding is from the savings account. A computerized system automatically debits the savings account every time a check is issued by the account holder. There are two separate account numbers for the current and savings account. But the account number of the current account is automatically captured and the system is directed to charge the check to the savings account. With this type of service, the bank charges a higher fee than the normal maintaining balance of the current account or savings account balance because of the use of the customized system. If the current account and the savings account have the maintaining balance of 10,000 pesos each, then the auto debit transfer account will have a maintaining balance of 25,000 pesos. So dito daw po yung example daw po ng compensating balance on account holder's account is auto debit transfer account. So which is account na where payments are made through checks daw po. Pero daw po yung funding is galing po sa savings account. So ayun. Pero daw po dalawang type yun na account number, which is current and savings account. Pero yung account number daw po ng current account is automatically daw po nakaka-capture and the system daw po is nagcha-charge po nun directly sa check to the savings account. So sa type daw po ng service na to, yung bangko daw po is nagcha-charge na mas mataas na fee rather doon sa normal na maintaining balance doon sa current accounts or saving accounts daw po. dahil nga daw po sa customized system. So, here the compensating balance is not loan related, rather a balance is reserved for the maintenance and services required for the account. Instead of charging fees specific to the service rendered, the bank would rather offset it through the compensating balance on bank credits. This is a compensating balance directly associated with the loan activities of the customer. Typically, the compensating balance, as expressed in average daily balance, range from 10 to 20% of the loan and depends on the credit standing of the company. For instance, if the company borrows 500,000 and the bank requires a compensating balance of 10%, then the firm's account should maintain an average daily balance of 50%. So dito daw po is meron daw po sinusunod na average daily balance daw po na 10 to 20% po. So loan related po kasi siya, yung isa po hindi po. So yun. So depende din po yung 10 to 20% po na yun sa credit standing po ng company. Kunwari nga po, yung company po nag-borrow nga daw po ng 500,000, tapos yung nag-require po ng compensating balance po na 10% yung bangko, then yung account should maintain an average daily balance of 50,000 pesos. Bank require a compensating balance for 3 reasons. The first is to increase the effective interest rate earned by the bank from the loan lent to the company. At present, compensating balances vary greatly that banks have the option to stipulate maintaining an average daily balance on both the unused and used portion of, or only the used portion of the credit. Second, banks normally do not charge firms to the miscellaneous expenses for the other services offered to the client. To offset such, a compensating balance is required. The third and last reason for requiring and maintaining balance is for safety, that is, in case a default is incurred by the company in paying its obligation, the bank can immediately debit the account of the company. So to compute daw po the amount of to be loaned requires a compensating balance. Ito daw po yung formula. Amount to be borrowed, amount needed times 1 minus C, or ito po, compensating balance. Yung example ito. Gilmore Company needs 250,000 to bridge the gap in their working capital. Bonifacio Bank is willing to give Gilmore a loan but requires a compensating balance of 20%. How much is the amount to be borrowed to meet the compensating balance? So ito po yung answer niya, yung solution. So yung kailangan nga daw po nila ay 250,000 times daw po dun sa 1 minus 20. So unahin natin 1 minus 20 equals 0.20 equals 0.80. So ang mangyayari 250,000 times 0.80 is equals po sa 312,500. So yun. Though Gilmore Corporation needs only 250,000 to support its working capital, the firm has to borrow the entire amount of 312,500 to cover the compensating balance required by Bonifacio Bank. Thus, the compensating balance is equal to 62,500, which is 312,500 times 20% po nun. Yun po yung kalabas sa 62,500. So ito po another example. A company borrowed 150,000 with a compensating balance of 20%. Likewise, it has an unused line of credit amounting to 50,000 with compensating balance of 10%. What amount should be firm maintained in its account? Ito po yung answer and solution. So, 150,000 daw po, tas may compensating balance po siya na 20%. So, ita-times po natin dalawa. So, ang kakalabasan po niya is 30,000. So, dito naman po sa unused line of credit amounting naman po is 50,000. Times po dun sa compensating balance niya na 10%, which is kakalabasan po, tinimes po natin sila, minultiply is 5,000. So, 30,000 plus 5,000 equals 35,000.
Now, let's discuss the interest rate. What is interest rate? Interest rate is the amount charged, to the borrowing company for the use of funds of the bank. So, yung interest rate, ito yung amount or kung magkano yung charge ng isang bank company or lending company sa nahiniraman mo. Interest rate in short-term loans ay nakadepende sa amount of loan, intensity of competition among banks, financial capability of the firm, and the reason for borrowing. Interest rates charged to valued clients are normally less than those charged to clients who have not yet established a good relationship with the bank. And also, interest rate is iba sa mga bansa na may political and economical stable, na hindi economic stable. Next is the prime rate. Prime rate is the common basis for the computation of interest. It is the lowest rate charged by the bank and offered only to its most valued clients. So, prime rate is ito yung pinaka common basis para pag-compute ng interest. Tapos ito rin yung pinakamababang charge ng isang bangko sa mga valued customers nila or yung may magandang relasyon na sa company nila. Next is the interest rate charged to clients also depends if it is a fixed or a floating interest rate. So, depende rin kung yung sinacharge na interest sa mga clients is fixed or floating interest rate. Now, let's talk fixed interest rate. Fixed interest rate are the rate charge is constant regardless of changes in the prime interest rate. While the floating interest rate is a rate charge on a loan that adjusts as the prime rate changes. Now, let's talk about methods of interest charging. Or pag-usapan natin kung paano makukuha yung interest. I think meron tong dalawa. Una is yung add-on interest. The interest is computed based on the outstanding loan balance and whatever interest computed is added to the principal payments. So, yung add-on interest is kinakompute siya based kung sa magkano inutang mo. Tapos, kung magkano yung interest na na-compute is idadagdag siya sa inutang mo. Here's an example. Assume a loan of 150,000 that had an add-on interest of 12% for 90 days. Compute for the interest due and the total payment required on the 90th day. Use 360 days in a year. So, ito yung answer. Ito muna yung formula na ating gagamitin para makuha yung interest. Interest is equals to principal times rate times time. Where the principal is kung magkano yung niloan mo, the rate is kung magkano yung percent ng interest, and the time kung hanggang kailan mo siya pwedeng bayaran. So, the principal is 150,000. The rate is 12%, so we can convert it to decimal 0.12. And the time is 90 days. And sabi sa given, use 360 days in a year. So, ito yung magiging solving natin. 150,000 pesos multiplied by 0.12 multiplied by 90 over 360. And the answer is 4,500 pesos. So, on the maturity date, yung pinaka-total payment ay magiging principal plus interest. So, yung principal is 150,000 pesos plus yung interest is 4,500 and the total payment is 154,000 pesos. And the other methods is the discounted interest. Ito naman, yung interest ito is computed is i-deduct kagad sa principal amount of the loan. So, here's an example. Assume a loan of 150,000 with a discount rate of 12% for 90 days. So, parang same lang nung unang example. Compute for the interest and discounted amount of the loan. Using 360 days in a year, how much should be paid on the 90th day? So, pag kukuha ng interest, same formula. Interest is equals to principal times rate times time. So 150,000 times 0.12 times 90 over 360 is equals to 4,500. So para makuha naman yung discounted amount is principal minus interest. So the principal is 150,000 pesos is subtracted to 4,500 pesos is 145,500 pesos. So yung pinaka loan payment sa 98 day is 150,000 pesos. 145,500 plus 4,500 pesos. Now let's move on to cost of commercial bank financing. The cost of commercial bank financing is measured in terms of the effective interest rate. So nasusukat siya sa effective interest rate. Ito yung pinaka-rate charge ng bangko or other lending company sa mga nangungutang or naglo-loan. So the effective interest rate is computed using the following variables. So may 5 variables para makompute ang effective interest rate. Una is yung interest amount. Pangalawa yung interest rate. Pangatlo yung days loan outstanding. Pang-apat yung method of interest charge. And the last is the type of loan. So next is effective rate on add-on interest. The effective rate on add-on interest is the most basic computation para makalculate yung loans at yung i-charge na interest. So here's an example. A loan with an interest amounting to 15,000 pesos per annum on a 150,000 pesos loan for a year will have an effective rate of 10%. However, this is only true if the loan is good for a year. What if the 15,000 pesos interest carries a 90-day loan? What will be its effective rate? So, here's the formula na gagamitin natin para makuha yung effective rate sa add-on interest. Effective rate is equals to interest over principal multiplied by days in year over days loan in outstanding. So, 15,000 pesos is the interest over the principal, which is 150,000 pesos multiplied by days in year, the 360 over the days loan in outstanding, which is the 90 days. Then the answer na makuha natin is 40%. Next naman is the effective rate on discounted interest. So yung formula na ginamit natin sa effective rate on add-on interest is ayun pa rin yung gagamitin. Ang pinagkaiba lang is yung interest is isusubtract kagad sa principal. So using the same example nung nandito, the effective increase rate would be same formula, which is effective rate is equals to interest over principal times days in year over days in loan in outstanding. So, may mali pala dito kasi that effective rate is equals to interest over principal minus interest. So, correction lang yun. Then, is equals to 15,000 pesos, which is the interest, over 150,000 pesos minus 15,000 pesos multiplied by 360 over 90. Which is the answer is 44.44%. So, note lang that the effective interest rates on a discounted loan is higher than that of the loan using an add-on interest. The reason is that yung principal, which is the base for computing the rate, has a smaller amount. So, next is the effective rate with compensating balance. So, sa sinabi na kanina nung sa reporter is, the formula to compensate for the loan to be borrowed is the amount needed over 1 minus C. So, same concept will be applied in this case, except that numerator this time is the interest rate. So, here's an example. Assume that a company is charged 9% on its loan for 1 year with a compensating balance of 15%. What is the effective rate with the compensating balance? So, ito yung ating formula. Effective rate is equals to interest rate over 1 minus C. So, is equals to 0.09 over 1 minus 0.15. And ang makukuha natin is 10.59%. So, meron pang isang way para makompute yung effective rate ng compensating balance. Ito yung formula. Effective rate is equals to interest over principal minus C multiplied by days in a year over days loan in outstanding, where C stands for compensating balance. So here's an example. Connolly Corporation is paying 100 pesos interest for 120 days on a 1,000 pesos loan with a compensating balance of 10%. How much is the effective rate? So, yung formula nga na gagamit natin is effective rate is equals to interest over principal minus C multiplied by days in a year over days loan in outstanding. So, the interest is 100% over the principal, which is 1,000%, minus C, the compensating balance, which is 100%. So, paano nakuha 100% na yun? Ang sabi sa given is the compensating balance is 10%. So, kukuha natin yung 10% ng 1,000, which is 100. And multiply by 360 over 120. And the answer na makukuha natin is 33.33%. Next is the effective rate on installment loan. So, as mentioned earlier, an installment loan is an obligation where principal payments are made in series. Financial institutions normally charge interest on an add-on basis. So, to compute for the effective interest rate of installment loan, the formula na gagamitin is 2 multiplied by annual number of payment multiplied by interest over the total number of payments plus 1 multiplied by principal. So here's an example. Concon borrowed 15,000 pesos on a 12-month installment basis with total monthly payments applicable on interest and principal. The interest rate charged by the lending institution is 12% per annum. Thus, that interest will be 1,800 pesos for 1 year. So, since this is an add-on interest, then the total payment will have a face value of 16,800 for 1 year with a monthly payment of 1,400 pesos, which is 16,800 over 12. A 1,400 pesos payment per month inclusive of interest and principal, and without actually using the 15,000 pesos for 1 year, gives an approximate outstanding loan balance of only 7,500. Thus, the effective interest rate will be, ito yung gagamitin ng formula natin kanina. The 2, which is the sinabi ng given na, multiplied by the annual number of payments, which is the 12 or 12 months, multiplied by 1,800 pesos, which is the interest. And over the total number of payments, which is 13 multiplied by principal, which is 15,000 pesos. And ang makukuha natin sagot is 22.15%. Now, let's talk about the banker's acceptances. Banker's acceptances, according to Mellicher and Norton 2003, is mainly used for transactions to finance the shipment and the handling of merchandise between an exporter and an importer. So, the banker's acceptances are type of short-term financing in a sense that they mature in less than a year, normally less than 180 days. This kind of security entails a small amount of risk because of the backing made by the importer's bank. And next is the commercial finance company loans. At times, when credit is unavailable from banks, a company in dire financial straits has to go to other financing or lending institutions. So, pag hindi available na yung credit sa ibang banko, yung ibang kumpanya na may parang dire financial o yung dire situations na is pupunta sa ibang financing or lending company. Because of the risky nature of the company, financing or lending institutions charge interest rates higher than those of commercial banks. Collaterals like accounts receivable, inventory, or fixed assets are sometimes attached for security reasons. And Here's the next reporter.
So, commercial paper. Commercial paper is a form of unsecured short-term debt. Dito sa first bullet, ang commercial paper, normally ito yung unsecured loans or borrowing. Borrowing na malaki ang chance na malugi ang isang company o yung isang corporation. So, ano nga ba yung nagiging sanhi ng unsecured for lender? Ito yung interest rate, usually higher yung nagiging interest ng isang corporation. Not guaranteed by any asset. So, second bullet, it's commonly issued by companies to finance their payrolls, payables, investors, and other short-term liabilities. So typically, it issued by corporation for financing of account receivable, investors, payrolls, payables, and other short-term liabilities. Then, third one, maturities on commercial paper range from 1 to 7 to 270 days with an average of around 30 days. So, itong maturities on commercial paper, parang bihirang umabot ng higit sa 270 days. Then, last. Commercial paper is issued at a discount and maturities at its face value. So, commercial paper is usually issued by companies with very high credit ratings. Because of this and because it generally maturities in a very short period of time, commercial paper tends to be very low risky investment. And most commercial paper is assessed by more than one rating agency. Although commercial paper is occasionally issued as an interest-bearing. And note, it typically trades at a discount to its par value. In other words, investors usually purchase commercial papers below par and then receive its face value at maturity. The discount or the differences between the purchase price and the face value of the note is the invest received on the investment. So all commercial paper interest rates are quoted on a discount basis. So here are the examples. Common corporation having a high credit rating is given an opportunity to issue a commercial paper worth 100,000 pesos at 15% for 120 days. The funds obtained from the issuance will be needed for 90 days only. The excess funds on hand can be invested in securities with a rate of return equivalent to 12%. The brokerage fee of the marketable security transactions is 2%. So what is the cost of issuing the commercial paper? So ito yung answer. Interest expense. So 100,000 pesos, which is the commercial paper, times 0.15, which is yung 15%, times, so equals 15,000 times 120, which is the 120 days. So 15,000 divide times 120 divide 360, is equals to 5,000 pesos. Then add the brokerage fee. So 1,000 pesos, 100,000 pesos times 0.02, which is the brokerage fee, is equals to 2,000. So 5,000 pesos plus 2,000 is 7,000 pesos. So ito yung total cost, 7,000 pesos. Then now, less less return on marketable securities. So 100,000 pesos times 0.12, which is the excess funds, is equals to 12,000 pesos times 30. So yung 30 na to, nakuha to sa 120 days sa commercial paper. Then i-minus mo to sa funds obtained na 90 days. So 120 minus 90 is equals to 30. Kaya ito nakuha ng 30. So yung 12,000 times 30 divide 360 is equals to 1,000. So 7,000 pesos minus 1,000 is equals to 6,000 pesos. So yung nakuha natin na net cost is 6,000 pesos. So receivable financing. During an economic slump, where various markers suffer from the crunch, firms have difficulty collecting receivable on credit sales on time. With minimal cash available to run their operation, they resort to borrowing. Since banks also face the same situation, most often they required companies to offer collateral to back up the firm's loan application. As an alternative, accounts receivable may be offered as collateral. So sabi dito sa receivable financing, isa panahon daw ng pagbagsak ng economic kung saan ang various marker ay dumaranas ng crunch or crepitation. Ang mga company ay nahihirapan mag-collect ng receivable on credit sales in time. With minimal cash na magagamit ito run their operation. Then sila ay humiram o nag-borrow like ng money or pera. Then since yung bank din ay naharap sa parehong sitwasyon. So kadalasang hinihiling nila na ang mga companies daw ay mag-alok ng collateral to back up the firm's loan application o yung pautang ng kumpanya. So as an alternative, ang mga account receivable ay maaaring i-alok bilang collateral. Then receivable financing allows the company an elbow room to raise money out of its current receivables. So dito receivable financing daw ay nagbibigay daan sa kumpanya ng isang elbow room upang makalikom ng pera mula sa mga kasalukuyan na tatanggap nito. Then the most common forms of receivable financing are A. Pledging of account receivable. So ang pledging account receivable is occurs when a business uses its account receivable asset as collateral on a loan, usually a line of credit. Then B. Assignment of account receivable. So assignment of account receivable is a method of debt financing whereby the lender takes over the borrowing company's receivable. Then C. Factoring of account receivable. So account receivable factoring is a way of financing your business by selling unpaid invoices of cash advances. Then last is discounting of promissory notes. A promissory note can be sold to a bank before its maturity date if the holder is in need of cash.
Hi, my name is Dranreb Del Monte. Report is inventory financing. So, dumao naman tayo dito. So, ano nga ba inventory financing? So, sinasabi dito, inventory financing happens when a firm has nothing to offer as collateral for a loan. Inventory as collateral requires consideration of the marketability, purchasability, and market price stability to give assurance that such inventory could be liquidate in the amount of sufficient to recover the loan in case of non-payment. The merchandise should not be object to rapid obsolescence as good collateral inventory is the one that is relativity standard and can be sold by other entities apart from the market organization of the sinasabi dito na yung inventory nagre-require siya ng consideration sa marketability, perishability, and market price stability para mabigyan daw ng assurance ang ibang inventories na liquidated in an amount sufficient para ma-recover ang loan in case of non-payment. Sa types of inventory financing. Number one type of inventory financing is floating lien. Also known as blanket lien, is a type of inventory financing where the creditor is not necessary. It's only serve as additional protection so that creditor position will not be has to claim on inventory as a whole without specifying the kind of inventory attached. Ayun. Alam naman natin na ang floating lien ay kinikilala din siyang blanket lien. Isa daw siya ay types na ng financing na kung saan ang mga creditor ay is not hindi sure or not necessary. Ito ay nagsiserve lang siya sa mga additional protections, mga creditor position para hindi maklaim yung inventory as a whole, specifying the kind of inventory being attached. Next type is warehouse receipt. Under this agreement, goods are specified, segregated, and stored in a public or terminal warehousing company. That debtor who secured the warehouse instruct the warehouse keeper to issue a warehouse receipt to creditor signifying that inventory attached as collateral have been delivered under custody. Ito naman ay isang under agreement na specified siya. Ito daw ay stored in a public terminal or sa mga warehouse company. Sinasabi dito na debtor daw ay siya yung the one who secured the instruct the warehouse keeper to issue a warehouse receipt to the creditor. So here's some example of warehouse receipts. Okay. Probal Corporation wants to finance its 200,000 inventory. Funds are needed for 60 days. A warehouse receipt loan may be taken at 12% with a 70% advance against the inventory value. The warehouse cost is 9,500 for the 60-day period. How much is the cost financing the inventory? Okay. Makikita natin as is okay. Makikita natin dito sa baba. 200,000 times 0.12 times 0.70 times 60 over 360. Naging ang warehouse cost, ang total niya is dadagdag din natin si warehousing cost 9,500. Ang magiging total cost niya is 12,300. So the last types of inventory financing is trust receipt. Under the scheme of inventory financing, although the title of the inventory is retained by the creditor, the debtor is authorized by the former to use inventory for production or selling, provided that whatever proceeds from the use of the inventory entrusted to the debtor will be remitted immediately. The inventory that serves as collateral specially marked and identified by serial number. This type of financing is commonly used by manufacturers who import the raw materials to be used in their production and traders who import goods for resale. Debtors normally use this kind of financing due to the lack of funds to finance that needed inventory. So from the word trust, ibig sabihin mapapagkatiwalaan. So ano nga ba yan? So under the receipt ng inventory finance, although the title is retained by the creditors, so yun no, si debtor daw is authorized daw siya dating gumagamit ng inventory ay sa pagtitinda, sa pagbebenta, or rather be, so yun nga. And ano man ng maging procedure sa paggamit ng inventory, si debtor ay will be remitted immediately. Yun lang po.